One.
Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about October in review, current mortgage rates, and rate hike forecast. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. October turned out to be one of the best Octobers the market has had in years. Where do we go from here?
Hey, good morning, everybody. Welcome to November. As you know, if you've been following along with the family, unfortunately, we were all kind of in for Halloween. Kind of sick across the board. I'm pretty much through mine. I still have some remaining cough, but trying to keep our youngest healthy for playoffs that are coming up today for volleyball. So bear with us. That's why you haven't seen a video out. I will probably do this video and then not another one until Friday. Just to try to get past this thing. So I'm just coughing and hacking in your ear. So back to the question. October, it turned out to be great, right? And who would have called that? Generally, October is one of the worst months for the market. So a good October is generally not even good. It's just kind of breaking even. When you look at the numbers, 14% in the Dow, 8% in the S&P, and then 4% in the NASDAQ. What that really tells you, those numbers specifically tell you, is a tilt towards value. So value kind of came screaming back to the tune of 10+%, but really technology and some of the earnings we've had, you saw Meta get beat up, you saw Amazon get beat up, Apple surviving on its own, but really it's kind of out on an island as far as tech. So, excuse me. With 4%, only a 4% move up, with the rest of the market kind of healing higher, as I'm actually making a little bit of a nibbling back into technology, kind of broad based, not really focusing on any specific country, but getting broad market exposure to technology. So I think the technological part, the NASDAQ, is going to catch up with the recovery that we've seen in the rest of the market. But overall, October turned out to be fantastic. We'll see if November can continue that streak.
Next, 30-year mortgage rates have now stabilized above 7%. What does that mean for the housing market?
Well, it's kind of crazy, right? So it's been above 7% for almost a month now, to be honest. So what does that mean? Mortgage demand is cratered. You're going to see lowest levels, ever, all kinds of setting, kind of some new stats. But to kind of review, if you look at 2021, that was the housing craze, right? You had to be a cash buyer. You had to show up. You were overpaying. You were outbidding everybody else. That sort of thing. Well, when you get to that stuff, and it's hard because if you plan on moving, and then that's the time to move. You kind of just have to pay what the market asks. But if you have choices, then it was hey, just wait, because things are getting a little insane right now. How does that parlay to now? We started the year at 3% mortgage, which is, again, super cheap money. Now it's a 7%, which is now on the more expensive side of money. So good luck qualifying. It takes a lot more income to qualify for these loans. So there's just a lot less available buyers to buy your house, which means housing prices will likely reset to the tune of 10, 20, maybe even 30%. And honestly, when you think of the Fed raising rates, they're probably, everybody's mad about the market and the sell-off, and it kind of is what it is, but markets do come screaming back. The housing market does not come screaming back. So I think they're really looking at the damage they might be doing, or potential for damage in the housing market. But right now, if you have options to buy a house, just wait, right? Prices are coming down. Nobody's forcing people to, that's a good part about a home, is nobody forces you to sell because you can live in it. But right now, yeah, if you're a seller, yeah, you just don't expect to get as much for your house as you would have, a year ago. And if you're a buyer, if you can wait at all, just the prices are coming down and going to come to you.
Last, the Fed meeting starts today with the next rate hike coming tomorrow at 2 p.m. Eastern Standard Time. What do you think is priced in already?
Yeah, so I think the big question is, the rates have steadily gone higher all year long. It's been fairly well forecasted. And what's nice is the Fed has kept fairly onto their script, if you will. So what's scripted? Right now, baked into the market is another 75 basis point rate hike and then 50 after that, and then 25 after that. So when you think of the forecast, 75, 50, 25, and then hold. I think that that's what's baked into the market. So if you see that, the market's going to celebrate that and move higher. If you see more than that, then obviously the market will continue to sell off just a little bit. So what does that mean for your portfolio? I do think it's time. I think the Fed's going to try hard to stick to this. We just talked about housing first intentionally because I think if the Fed continues to raise rates more than that 75, 50, 25, you're going to see mortgage rates above 8%, and you're going to see some real damage and real folks hurt from just the rate hikes alone. So I think the Fed wants to avoid that. The economy, the third quarter GDP was positive, so I think that gives them some incentive to not overdo it with the rate hikes. So I think they will stay the 75, 50, 25 and hold. And then on into 23, I think we start to see rates drop when you see the damage that's been done as we go into a recession. But the hope, right? If you believe the Fed hope is that they could do 75, 50, 25 hold and avoid a recession. I think that's a little optimistic. I think we're going to end up in a recession either way. But that's what I forecast. And again, it all starts off tomorrow at 2:00 Eastern with the initial announcement. Again, 75 basis points is what I expect, and I see very little. The odds are pretty small that there's anything else other than that.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.